Welcome to the Daily Exchange! Guys, we're talking about Binance Coin, a deep dive. We've got James O'Donoghue here. He's a crypto trader at HiveX. You're in charge of operations at HiveX.
Yep.
Kind of cool.
Operations and growth.
Now, straight up, we just want to say this is really important. You do currently hold Binance Coin.
I do.
So full disclaimer.
Yep. As well as some other crypto delicacies.
Yeah. But having said that, don't take our word for it. This is just the facts. This is where all the information, make a balanced decision. This is not financial advice, guys. So just wanted to start off by saying that. Now, let's get into first things first. Tell us about, Binance, like BNB in general. What is it?
Okay, so Binance Coin is a Ethereum-based token. Mm-hmm. And so this was basically, they created it out of thin air, and then they sold this coin or token to people that were willing to give them money to raise that capital. Mm-hmm. And so we saw basically in December of 2017, Binance received about $15 million US in Ethereum, mm-hmm. and in return for that issued out 100 million Binance Coin, and then there's a further 100 million split between 40% to developers, so the Binance team, and then 10% to angel investors. Mm-hmm. So we have a total supply of 200 million Binance Coin.
Okay, so there's 200 million Binance Coin on issue. They raised 15 million December 2017.
Right at the peak of the ICO kind of pop.
Now, what makes BNB valuable?
So behind BNB essentially is what's called a utility token. Mm-hmm. And so to understand why BNB is or could be successful, it's really down to that. What makes a good utility token? Mm-hmm. Because we've seen plenty of them. If you've been around for a while in this space, you've seen plenty of them not deliver, right? Mm-hmm. With BNB or Binance Coin looking like it is working. Mm-hmm. So why is that? We've got basically three core principles. And if you understand these, then you can literally look at not just Binance Coin, but any project that says it's a utility token, mm-hmm. and identify for yourself if it has these. Mm-hmm. You have generally a finite amount of that token. Mm-hmm. So in this case, we have 200 million Binance Coin. Yes. Then you build in a clear and specific function for that token, mm-hmm. and that function needs to drive meaningful value for its participants or stakeholders. Right. And so there's all sorts of ways that projects try and do this. Mm-hmm. And I guess today we're looking at how Binance has done this, mm-hmm. and what its plans are for the future.
So let's get into this now. So we're going to go through each of the utilities of BNB first. We've got the finite token, so that's the point one. Now let's talk about the uses of BNB. So let's start off by just saying when they launched, when they did their ICO, what was their proposal of that usage?
So super straightforward and simple. I think it paints a really clear picture. Is people that trade on the Binance platform have to pay trading fees, mm-hmm. and it's like quite a small amount. But if you're trading a lot or you're trading frequently, it does certainly add up. Mm-hmm. Binance offered basically a discount on your trading fees. Right. If you pay in Binance Coin, right? Okay. And so there's a pretty clean and simple formula there. If you buy Binance Coin, you can then do your trades as you normally would, and then pay a discount on the fees.
Now, a couple of stats on this. Throughout 2018, Binance processed $1.56 billion of average trading volume.
Yep.
They also
per day.
Yep. They facilitated 36.6% of global crypto spot volume, which is a lot.
Massive.
That's huge, right?
Yeah, they're literally number one.
Okay, so and then this place, and I think they became quite famous, with this when they got hacked. They paid everyone the money back. Funds are SAFU, and they showed that real value and trust with that exchange and that utility, because a lot of exchanges have been hacked and things like that.
Yep.
So if you were to sum up, this point, is this a meaningful value that you can pay your fees?
For people that trade on the Binance platform, absolutely. right? It's an economic incentive, right? Straight off the bat, I can trade as I already am. I already want to buy into and out of and swap whatever these coins are. Why not receive a discount? And all I have to do is buy this thing that's going to give me an immediate benefit. I think perhaps what's interesting to consider though is that in the first year this discount was 50%. Then now in current year 2 it's 25. It'll halve 2 more times in 2 years and then drop to 0. And so you might look at that and think that's a diminishing utility, right? There's less incentive for you to need Binance Coin. And so then we start to look at what else are they doing to really like pile in more utility on that coin, more reasons to use it to get a functional benefit, right?
Okay. So going down, so that incentive is going to end. So let's move on. That's that, but it is meaningful.
Absolutely.
That's what sort of started it off, right? Because and correct me if I'm wrong, but then also they would burn tokens, right? So, but we're going to come to that in a sec. Let's talk now about the Launchpad. Now, this is a new thing, a new bit of value. Can you explain how does the Launchpad work, and how does it where is the utility for BNB in it?
Of course. So essentially, the Launchpad started something that is widely becoming recognized and picked up as what's called an IEO. And so instead of having an initial coin offering like we saw through 2016 and ramping up until it popped in 2017, an IEO is the same thing. The only difference is that the capital raised for these projects is exclusive to an exchange's ecosystem. And so if I'm Binance, I can find and vet projects that I think are suitable and that have good leadership teams and a viable actual product. And I can bring them into my exchange, expose them to my audience and say, we're raising $6 million US. If you're a Binance user, you can now invest in this if you like. In return, you'll get a utility token. You need to go and assess for yourself if that utility token is going to have these functional benefits that we're talking about. But if you are interested, it means that you're able to do that. But the catch, and it's a good catch, is that the only capital that you can contribute to these raises is Binance Coin, right? And so you've got your trading fee discounts, but now you have another reason. If you would like to invest in these projects, you need Binance Coin so that you can then invest it.
Okay, and all throughout 2017, 2018, there was huge amounts of Ethereum bought to be put into these ICOs. Which is kind of similar. Is that similar?
Massively similar. And I think that this is something will probably be better to touch on later as we really build together what it looks like Binance has on their roadmap. But there is I think a very strong argument that that's exactly what they're going after in this model.
Now let's get back to that. Is this? We have an example. Tell us about one of the launch pads. There was Fetch.ai. Tell us about that one. Like what happened there?
So Fetch AI was a project looking to raise capital. Binance listed it on their Launchpad, and so basically there's a countdown, and then it's up. Everyone can try and click a button and have a chance at getting into it and purchasing it. And there was something like 19,000 odd people that tried, and only I think 2,700 were actually successful in getting their order through. So you have a massive amount of people that I guess are left a little bit unhappy. And maybe they bought Binance Coin for that purpose, and now it's kind of like, oh, what do I do? But we saw $6 million US equivalent in Binance Coin raised in about 22 seconds flat.
6 million in 22 seconds. Just all in BNB as well. They all had to buy $6 million of BNB to contribute that capital. So at some point that BNB,
We saw as far as a couple of weeks out, the market start to react to this. People anticipating not just trying to get into this if they're interested, but also what comes next. And I think that that's also a really common theme that people are noticing with Binance is that it's just what comes next. They keep seeming to find like really creative ways to iterate their business and just layer in new ways of creating value for their stakeholders. Okay.
Now, if you want to get involved with these launch pads, Finder has got a great guide on how to get involved. Obviously, a guide on Binance Coin. Check it out, guys. We've got the link below. Click on that link, and you can get yourself some Binance Coin. There are other places to get this as well, and we'll talk about that at the end. But what we're going to talk about coming up is some of the great plans that Binance has. But check out that guide if you want to get involved with that Launchpad. Now, let's talk about there's been a change with this Launchpad, and there was a problem with it before.
Yeah.
And now they've made a change. Tell us about that.
It's not so much that there was a problem before, but what was happening is that a lot of their audience, a lot of the users and passionate people about Binance Coin were missing out on this opportunity. It wasn't just that it was a luck of the draw, like a literal click a button, see a spinny wheel, maybe get allocated funds. You also had to be up at 1 a.m. or whatever the respective time you're in is, and you literally had to be on the platform. And there's videos floating around of rooms completely filled with people all just smashing the button, trying to get in. But you get a huge portion of people that are left missing out. So I guess true to Binance's model of literally trying something, assessing it, trying something different, assessing it, that we've started to see, they've now restructured how this Launchpad raise will work. We haven't seen how this will pan out just yet, but it's looking like there's going to be a lottery. You have to have between 50 and 200 Binance Coin in your account, and that gives you one lottery entry.
Okay.
And then you have up to 500 Binance Coin for 5 entries.
Okay.
So the most you can have is 5, and basically there's a mathematical provable way. If you want to enter and get these entry tickets, essentially there's a lottery, and you can win a chance to invest in these projects.
Right.
So
Now,
it's just a fair way.
Okay, so and let's go back to your principle. Why does this lottery again increase the price of BNB?
Right, so in the lead up to other Launchpad projects, we saw quite a steep spike, where what this lottery does is that the amount of entries that you're able and eligible to get is based on a minimum account balance over the 20 days preceding the lottery or the Launchpad listing. And so what this means is that you have to effectively hold your Binance Coin for that period. So if you have like 405 Binance Coin, if you were to sell down 5 Binance Coin, you now are no longer eligible to get that 4th entry. And so the idea is that it decreases sell-side pressure. There's less incentive for people to sell, especially when obviously past performance is not an indicator of future performance, but previous Launchpad IEOs, I should say, have done extremely well when listing on the exchange immediately. It's almost like an effective dividend for some people. Less sell-side pressure, more incentive, more tickets if you hold more. It seems just like a really simple economic structure. Time will tell over a longer period how that goes.
So when, and it's sort of a 20-day period prior to this, potentially for the lottery. So you want to hold 500 BNB. So again, that removes that sell side pressure. And when this announcement of this new lottery came out, BNB went up about 11%.
Against the price of Bitcoin.
Against the price of Bitcoin. Right.
Within like 4 hours, it just...
Okay, so maybe the market might be seeing this as a valuable way and a meaningful way to create value. Now, guys, obviously, if you want to get involved with the Binance Launchpad, check out the Finder Guide. We've got it here in the link below as well. Check that out. Now, let's talk about this IEOs. The question I have around this, and I think, is this long term? Is this feasible for the future? Because listing these projects and then putting them on Binance and then, is that long-term feasible?
That's the space that we're playing in. We're at like the pinnacle of people trying to find new and creative ways to drive value. Is it long-term? Well, yet to be seen. I think that the ability to raise capital through this mechanism at a foundational level is long-term. I think for Binance specifically, it's one exchange that has... it's basically at the moment 1 project a month coming on. There's a lot more than 1 project a month wanting to raise capital throughout the world in crypto space. And so what we have is other exchanges starting to offer similar things, and other exchanges with their own utility coins, right? And so if there's a really attractive project that chooses to go elsewhere, then there's less incentive for the Binance coin at that period in time, right? So that's one risk. For people to consider is that it's not just like Binance has to do the job at actually keeping up with the volume of viable projects that people want to invest in. Because if they can't, then people will have to go elsewhere to invest in those projects. As far as the model goes, the other risk, I guess, is that it creates a centralized entity, which is Binance, that has the gateway into their audience. And so if you're a project and only projects that are successfully raising capital is through this model, you now have to basically go and try and beg to be accepted onto this platform, and perhaps offer up a huge amount of equity in order to do so, which creates risk around fairness and things like that.
Right. Right. So let's move on from that. That's the IEO space.
Yep.
Let's talk about the coin burns. This is another utility of BNB.
Right. Yep.
Tell us, what's this coin burn all about?
So this is one of the first features that was with Binance Coin to start with. But basically, at the end of every quarter, Binance will burn 20% of their profits in BNB. And by this, I mean that they literally take 20% of their profits that they hold in Binance Coin, and they, I'm trying to think of the analogy, they literally burn it. It's deleted. It's gone. They use a smart contract to do this. They send it to that smart contract, and it is, you cannot get it back.
Right.
It's destroyed. And the total supply, as a result, is reduced.
And we've got an image here, guys, of that with the token burn. 10 million BNB have been burned, or just over 10 million BNB.
Yep.
About 130 million USD worth, and it reduced the supply by about 5.41%.
Yep, and you can see all of their previous burns. It's all publicly available on the blockchain.
Okay.
You can verify it, but ultimately what this means is if you have a supply of 200 million Binance Coin and this is gradually decreasing, then every time you burn a coin, you're effectively redistributing its value to everyone else that still has real coins.
So it's like in shares when you have a share buyback.
Right.
Okay.
Quite similar.
And why, again, so this decrease in supply is buying back tokens and therefore essentially potentially increasing the value for other token holders.
That's right. At a very baseline economic model, it should increase or could increase the value of the remaining tokens. And Binance has actually committed to burning 100 million Binance coins, so half of the total supply. So the argument is that if nothing else changes, then you have a decreasing supply. Although if nothing else changes, there could be other issues.
So they've committed to burning 100 million regardless of whatever those other numbers are. So it might be higher or lower, but it's at least a
20% of their profits until it's burned 100 million.
Wow.
So if they start to have monstrous revenue and they're burning larger proportions, then that could speed it up. Or also lower revenue months if we can, drop back into a bear market or something, then it'll drag.
So Binance Coin is on Ethereum. And this is Binance Chain or this DEX going to be on Ethereum still?
Right. So no, it's Binance Chain is basically it's a new blockchain that's got its own rules of consensus and its own capabilities there. And what they're going to do is basically reissue every Binance coin to people that can prove that they already own it on the Ethereum blockchain. And so this will likely be done through the actual Binance centralized exchange. You'll deposit your Binance coin and it will literally just get credited into being a Binance coin on the Binance chain. From there, you'll be able to use it on the Binance chain. Where the DEX comes into it is quite straightforward. So you've got a normal cryptocurrency exchange right now is centralized. They take custody of all the assets that get deposited there, and then as a consumer or a trader, you're effectively relying on them not to lose your funds, not to get hacked or not to literally misplace it. And recently there's an example with the CEO of an exchange dying in another country and no one knows where he is, and he was the only one with access to the keys, which is not good. It's not ideal to have your funds just somewhere else. The idea behind a decentralized exchange is that you rely on smart contracts to facilitate the actual trade. And so I have custody over my funds and you do too. We agree on a price and then we use a computer program to basically facilitate that trade.
Swap it, right.
Just to swap it for us.
Okay.
Now, the problem so far has been how to do that at speed, reliably, and at scale. And so you can do it fast for a small amount of people, but you can't do it fast for a lot. And what Binance is hoping to achieve with their Binance chain is the capability to facilitate what Binance can currently manage, like thousands of transactions a second, on and in a decentralized way. If they're able to do this, they are effectively able to offer the same service that's already being provided by Binance without taking custody of people's assets. So people can feel a lot more comfortable and confident in that. It decreases the likelihood of any issues because rather than having one big honeypot, one big exchange with huge amounts of capital, you have hundreds of thousands, if not millions of people each having their own little bit of custody. The Binance coin itself, yes, it gets transferred off Ethereum and onto Binance Chain. And then the fees that are used to facilitate trades are paid out to the nodes on this blockchain that will manage and run the matching engine. Right? And so it's quite simple. If Binance can do it at scale, if they can do it at speed, then you have customers or clients, traders with the ability to have a lot more security in their assets in the way that they trade, a lot more privacy. But the other whole side of it is that you have projects that, rather than what we're talking about with the Launchpad, where Binance has this exclusive remit and control over who is viable, who do they pick, who do they pick up and let people access to invest in. This shifts that whole functionality in the longer term to Binance Chain, right? And so projects can come, they can create and issue tokens of their own utility tokens on Binance Chain, raise capital, and then immediately have it listed on the DEX.
Yes.
Right? And so there'll likely be fees involved in this. Some of these fees will very much go towards BNB holders, but I think also there's plans for Binance themselves as a separate entity to retain some sort of revenue flow that way. So you might, it makes sense to have a reasonably high threshold so that you don't have projects that aren't viable and that are scams and the like not being able to just stroll in. You want to have a fair amount of capital to put a burden on that. But that's a good example, like what we've seen with Launchpad, how it's changed over the last sort of 6 to 12 months. Their business model, and now we have the lottery thing, and maybe that's a fairer way. We're going to see iteration, and that's the one consistent thing, ironically, is like change with Binance. Like they iterate, they learn, they iterate, they learn, and that's what's driven the consistency of value to date.
So it's going to have its own chain.
Yep.
It's not reliant on another chain.
Right.
It's going to have its own exchange on that chain, which is kind of like like Ether Delta with Ethereum. So it has Binance is making its own one, and then it's going to monitor basically this chain and this coin and this decentralized exchange and create this ecosystem for projects to really operate. It's kind of the future of exchanges, wouldn't you say?
I think so. And so I think it's like if we rewind, look at the utility of what makes a good utility token, and effectively the argument is that if Binance can effectively migrate its user base to using a decentralized exchange, whether it's theirs or not, but in this case it is, and they can build this exchange to have scale, and they can provide everyone with their own, every user has their own custody, so there's less trust issues. And then on top of that, they are no longer as a business burdened by their limitation of resource. So any project doesn't need to now go through Binance. You can literally go straight to this DEX, straight into this ecosystem. And so it massively could open up who can participate and get involved. The fees, it's all Binance Coin. And so for Binance Coin holders, there's likely, if it gets adopted, massive upside. If you're someone raising capital, issuing a token, and then launching on Binance Chain, if this becomes the #1 exchange, it's going to have the most liquidity, the most coin pairs that can be traded, and it will literally, that is so crucial for a project. If you go to a place and no one can buy what you have, and you can't sell it, and there's no one interested, you've got no legs to run on, right? But what this could end up being is quite massive. It's literally a decentralized exchange, global access, and there's no limitations on who can play in this. From a regulatory standpoint, I guess that there's some people that would look at that and say that's just insane. But on the other hand, it means that there's freedom of participation. Anyone can join this ecosystem, get involved, and some people prefer that sort of idea.
Awesome. So what's happening here is, what I'm hearing is money from the exchange or fees is being changed into, I guess, this DEX, the decentralized exchange. And so they're trying to basically cannibalize themselves. They're moving from their centralized exchange to this decentralized exchange,
right,
where they're going to have a Binance chain and a Binance decentralized exchange. So they're trying to go from fee revenue to actually pumping up the value of BNB.
Right, and so this starts to open up a really crazy idea that you have a centralized business essentially shifting equity away from their business and into the Binance coin. So if they create a decentralized exchange that is able to facilitate all of the matching engine and orders that are taking place, Binance is no longer the one that receives the fees out of this. It goes and is paid for the nodes that run this. And what that means is Binance is raising the utility of Binance Coin. As a business, they're able to do this by looking at the fact that they hold lots of Binance Coin. And so it's still an economic incentive for them as a business to disrupt themselves and to grow this decentralized exchange.
So we're like just zooming out for Binance. We've talked about the utility now. Where is this all heading? Where do you see Binance, BNB, where is this whole coin going?
Okay, so like keeping in mind utility, we have effectively the largest, most liquid exchange that's centralized on the planet, building a blockchain that can handle the same sort of volume. And then they're going to pass over the ability to execute and do the full order book matching to smart contracts so it can literally run on its own. And then there's basically entries and exits into having your coins listed on there. So you'll pay a nominal fee to be able to create your own coin and list it on the Binance exchange, decentralized exchange. What this means is that there's no people at Binance that now have to be under the limitation of their own resource, verifying and qualifying projects. There'll be a expensive-ish, maybe $100,000 US by the sound of it, fee to list your project, but then you're literally tapped into the liquidity available there. At a high level, what this looks like is you have individuals being able to access an even more liquid, more trustworthy exchange, and you have no limitations for projects to come onto this and to try and raise capital and to try and immediately shift from raising that into being a part of and having access to that liquidity.
Okay. And what's your view on CZ? Like, this seems like fairly inspirational, right? What's your view on his leadership of where Binance is going?
I think it's not just my view. There's a massive sort of user base that really think that he's managed to identify what the incentive mechanism is and really lean into it. It's just constant iteration and constant, like a genuine shifting value to BNB holders. And so I guess it a lot of people didn't see it coming, I guess, because you think it's a business, they're a centralized exchange, they'll get disrupted one day because there's these things called a DEX. But then they've just had this incredible foresight to go, if we build it and we build it into BNB, we can shift our equity there and we end up doing better. And so does every BNB holder in that scenario. And so on top of that, wherever the most liquid exchange is, it's going to facilitate like the most lively and active market, which is literally what makes or breaks a lot of projects, the ability for people to even access them.
Okay. What are the risks with BNB? What could happen?
Well, the risk is, especially for the DEX and the Binance chain itself, is that they're not yet here, right? And so there's a test net that's live. On the surface level, everything looks good, and we do have some comfort in the fact that it's being built by a team that's spent a large period of time actually delivering on time the kinds of commitments that they've made. But this is 100% a new territory. This is like the pinnacle of trading digital assets and having non-custodial exchanges, right? There's a huge range of things around usability, functionality, can it do it at scale? And that's yet to be seen. And that really is it's with any investment, but it is something that lays around the corner. Will it not work? We don't yet know. We don't yet know what happens if mass adoption comes. Can it handle the throughput?
Okay, so finally, everyone's done our research. Now we listen to this, or there's more research to be done. But you need to do your own due diligence. It's not financial advice. But if you do want to buy a BNB, does Hivex trade this?
Yes, we do. So Hivex specializes in large volume cryptocurrency trading through an over-the-counter practice. And so what this means is for trades starting at about $50,000, we're able to extract more value for our clients by accessing much larger liquidity that everyday people or retail exchanges just simply don't have access to.
Okay. So large orders of BNB, you guys can help them out.
Yep, absolutely.
Awesome. Thanks so much, James, for joining us. That is a very comprehensive deep dive into the BNB Binance Coin token. Let's catch you guys later. Yeah!